You're welcome to the Policy Council. My name is Okwemi Agbaje. On this edition, we look at the Nigerian capital market. How has it developed? Why did it collapse in 2008, 2009? And why is it recovering? What's this talk about an OTC market? I have one of the leaders in that sector over generations to discuss these issues with me. Enjoy the program. You're welcome back. It's the Policy Council still. And my guest is what I should call a guru, a financial and capital market guru. He's someone who was there long before people like me came in. And he has endured till today, and he's pioneering perhaps one of the most significant initiatives in the contemporary Nigerian capital market. My guest is Mr. Tola Moboluni. You're welcome, sir.
Thank you.
Mr. Moboluni is chairman of Capital Bancorp, one of our oldest capital market companies. He's chairman of Crusader Sterling Pensions, and now is chairman of the National Association of Securities Dealers, which is pioneering this OTC, over-the-counter market. We'll get to OTC, but first let me take your view, sir, on some of these, general overview on some of these sectors that you... How have you seen the development of the financial sector from the days when you were in Chase and Continental, and then all those transitions to what we have today? You must have a lot of thoughts about that. What are your biggest insights about that transition?
Well, I think times have also changed, and of course, the system, the financial system itself, has grown considerably, not only in terms of size, in naira terms, and also in terms of the complexity of the transactions, the institutions, things like that. And that should be expected. I think that what has changed, or the changes that have occurred that probably has not benefited Nigeria, of course, is the fact that the banking system has moved from a more balanced system to a short-term orientation. I used to tell people that in our days, we worked for merchant banks, and we focused more on
long-term loans,
syndications. It was
lending to manufacturing entities.
Lending to manufacturing entities. 7-year loans were, in point of fact, very common. And indeed, even after SAP, we still did syndications of leases. I think today, during SAP, everything went short-term, trade finance, and I think that's that's negative. That's very negative, and of course, as you can see, manufacturing has also declined. A lot of factories that were built in those days are now churches or just warehouses. And I think it speaks volumes about what has changed with respect to the financing and the structure of the economy.
I used to be head of financial institutions at GTB, and we had at a point 42 merchant banks that were my clients. They all disappeared. What happened to that sector?
I think too rapid an expansion of the banks. Capacity was not there to prudently manage those institutions. But you see, those institutions also existed within a social milieu, in which really there were no standards. Corruption thrived. As you know, most of those banks were also financed with round trip,
and that was a major activity.
Oh yes, in point of that was for most of them the only activity.
The reason they got
the license. They just wanted to get involved in the foreign exchange rent, that was available. I mean, and because nature does not allow a vacuum to exist. People will occupy this space. I mean, so the system allowed it, and people took advantage of it. Unfortunately, by the time they started tightening on regulations and things like that, a lot of them had no business really to survive, and they went down the way they should have gone.
Okay, let's take a short time out, and I'll be back with Mr. Mobole, and we'll focus on the capital market. We'll be right back. You're welcome back to the Policy Council. My guest is still somebody I call Egbon, and indeed, maybe I should call Daddy.
Not quite. Not
Mr.
that old.
Yeah, but in terms of your generational impact in the Nigerian banking sector, it's actually somebody we should look up to. Let's focus on the capital market and the collapse of 2008, 2009. Which had a devastating effect on many retail investors and many even operators, institutions and all of that. What do you think were the most critical drivers? Why did the market collapse in such a way? Was it just global factors? Was it a combination of global and local?
After the return to democracy, and especially after the reduction of Nigeria's debt, the forgiveness of Nigeria's debt, a lot of foreign investors came into the capital market on the heels of course, the growth in that market. And a lot of work had been done and sensitization had been done, and of course the banks had also come to the market to raise capital for the consolidation of the industry. Unfortunately, the banks also engaged in some unsavory activities in relation to that. There was too much lending to investors so that the banks can raise the necessary capital. And it was very interesting because if you went to the market today at 2 naira and your price earnings ratio at 2 naira was 10, now that meant that the earnings per share will be about 20 kobo. Of course, when you put that new money and you inject it into the company makes money, additional money, but marginally it's not 50 kobo. They've not issued the shares at 50 kobo, so there are fewer shares that have generated that money. Now interest rates were also high, so they made money, treasury bills, whatever, and the next year their earnings will be 3 naira. Now the attractiveness of the market made the bank to go, some of the banks to go back, and then they'll issue the shares at 3 naira. And of course, on and on and on. So everybody thought they were making money, but the capital of the banks were being expanded. But they were not also being invested in anything in the economy.
Substantive. They
were returning into the capital market to lend people money. All these factors ensured that the market itself was propped up by bank loans. You inject into that foreigners who saw the growth in the market and brought plenty of money. And of course the market kept going
surging
up and up and up.
And I remember a director general of the exchange telling us about 200,000% returns and all. Nothing could go wrong.
Well, nothing is guaranteed in a capital market. And I think that that's not the first crash that has happened in the Nigerian market. But this one was more profound because this time around, foreigners under the pressure of the U.S. Subprime crisis had to take back their capital. By the time the local banks realized what was happening, they started calling on their margin loans.
And then it became a...
And then it became, exactly, because everything just...
Now we have some measure of recovery.
Yeah.
Is it real?
I think to a large extent it is real. It is devoid of leverage that was there in 2008. The market has been considerably deleveraged. I mean, therefore, the kind of risk and the kind of crash that you witness that then will not occur again. Okay. There is still some risk in the market in the sense that foreign investors are back. In point of fact, one time they accounted for 70%. I think it's down now to
45,
30s, 40s. So there is still some amount of risk that can occur. But I think for us, what the authorities in Nigeria should focus on is that we must develop the domestic investment capacity. And that is, we must create savings institutions that can invest. Okay. And it's not just to invest for the sake of investment, because in economics,
invest for infrastructure.
Exactly.
Let's take a timeout and we'll continue this discussion. And I'll ask whether the regulation on the exchange has improved. We'll be right back.
My name is Laide Awoyemi. I live for Lagos. You see as our new Lagos just define the go. Good thing good though. To go market now, no hard at all. Just pay. Sit down inside BRT bus. Small time, you don't reach where they go. Hospital call, the full ground. And for me and my pikin where I just born, treatment now free. You look left, you look right. Them they build new roads, new hospitals, new schools, new things everywhere. Everywhere they shine, gone. We thank God though. But come on, I hear saying that this tax money will they pay. I think then they used to do all these good things. Me they pay my own tax too. Say they pay your own.
Pay your tax. It's your civic responsibility. It's your duty. It's the law.
Welcome back to the Policy Council. I have Mr. Tola Mobolumi with me, and we're looking at the capital market. Mr. Mobolumi, let me ask you, you're a major player in the capital market, in its institutions and its self-regulatory institutions. Has the quality of supervision and regulation, both by the NSE and the SEC and the self-regulatory institutions, has that improved?
Well, let me put it this way. We came into the market, I came into the market in 1978. It was a relatively small market. It was a sober market. You never sold shares in Oyinbo market. The banks changed all that. Because they distributed prospectuses at Oyinbo market, at the airport, everywhere, like the hawkers of one drug cures all. I think things degenerated. And there was, to some extent, exuberance in promoting the market. And when margin loans started, we must admit, the regulatory institutions failed. Because they should have put in
some control mechanisms.
Some control mechanisms.
Risk management.
In point of fact, they owed the public the responsibility to warn
them
and to, in point of fact, ensure that all operators offering margin loans had a caveat and a warning to the investors that this is a risky step you are taking. You can lose your capital entirely. They didn't take that action.
Indeed, they actually, I would argue, misled investors.
Well, yes. Not on the part of SEC, really. But I think the stock exchange was a little exuberant in promoting investment in the market. And a lot of people came to look at investments as a money doubling. Exactly, a money doubling thing. Indeed, some operators even guaranteed yields. somebody came and said he had taken a loan, a student's loan in America, and he has brought it to Nigeria to invest because they told him that he could double his money in 6 months. So he paid in the money into our accounts, spoke to our people, and they said they couldn't give him any guarantees. And the rule then was that, look, if you paid in money, because we don't want to be money laundering agents, you must do a transaction. If you don't do the transaction, then for you to withdraw your money,
You have to send it back.
no, you have to see me.
Okay.
You know, for them to even authorize for you that you want to withdraw your money. So he came to see me and said that he wanted, you know, my people won't give him guarantee. I said, won't give guarantee on what? On shares. We don't do that. That the market is the market.
Yeah.
When you go into the market, you are exposed to the vagaries of the market.
Yeah.
So he said, no, the other people are offering him guarantees. Why aren't we offering guarantees? I said, well, if you want guarantees, I'll give you your money.
Go to the other people.
A second person came, brought money, and said she wanted to buy shares in a company that I knew was under receivership. And I told her, I said, look, are you aware that this company is under receivership? He said, no, some people have bought it. They are reviving it. And that, you know, she has an opportunity to put money in now.
To double.
So I said, okay, no problem. That company is still in receivership. It's still dead. I mean, obviously she's lost her money.
Yeah.
The person who who brought, you know, students' loan from the US to invest in Nigeria and double the money, I'm sure he's in trouble now.
Yeah.
Because, you know, shortly after that was when the meltdown started.
Yeah.
I mean, but so operators had their blame.
Regulators
had their blame. But I think in between the time I joined and all these crises, this last crisis, there was also what I'll call regulatory capture. In the sense that, you know, an SRO virtually controlled what happened. The regulator. You know, and I think that, you know, that also weakened the system. I think the system has changed considerably.
Yeah.
I think the reforms, you know, that had been undertaken had reversed some of this. I think you have a more sober market environment, starting with the stock exchange, SEC, and even the Ministry of Finance, even the whole environment, and then central bank.
Yeah.
I think everybody has learned lessons, good lessons.
Okay, let's take our final time out, and I'll be back with Mr. Moboloyin to talk about the NASD's OTC market. Stay right on.
Every day, we strive to make Lagos a better place for you and for me. We are restoring and regulating our signage, beautifying our streets, and greening our environment. By assisting with infrastructure, we're lighting up the darkness for all our safety, health, and happiness. Helping Lagos grow into our own international megacity. We are LASA, improving Lagos, one street at a time.
You're welcome back. It's the Policy Council. My guest is Mr. Tomola Moboloyin. He's my Igbon and he's a guru in the Nigerian financial and capital market space. And he's the chairman of the Nigerian Association of Securities Dealers, which is starting an over-the-counter market, an OTC market. Please, Ms. Igbon, tell me about this. What's this OTC market about?
This was an initiative that came out from the Securities and Exchange Act, 1988-90.
Yeah, 88.
Securities and Exchange Act, which provided for the setting up of a National Association of Securities Dealers to promote an over-the-counter market. As you know, after indigenization, a lot of public companies had been created in which Nigerians had invested, but were not listed on the stock exchange. So it was a little difficult for people to
trade shares.
Or to liquefy their investments. For that reason, it was thought that an over-the-counter market will help in providing liquidity. Let me also then link liquidity with the general economic development perspective. Now, if you buy shares in a company and you cannot trade it, then anybody, next time you are selling shares, people are going to say, money that you just lock it up, you can't get it out. So liquidity helps in deepening the primary market. And therefore, for a company that wants to raise money, you must ensure that the people who buy shares have a way of exiting in a fair, transparent and efficient manner. Now, there was no such institution. So that was what that was supposed to do. SEC then took the initiative, set up a committee, look at the feasibility. The feasibility was done, and then a committee was set up of operators to go ahead and implement. Unfortunately, the politics in Nigeria and the power relations in the market, ensured that a lot of operators were even afraid
to be associated with something that could be an alternative trading platform.
Thank you.
To the Nigerian Stock Exchange.
Thank you. I didn't say so. You said so. But so a lot of brokers even moved away. But over time, those of us who believed in that market stayed with the project. A similar initiative in Taiwan, also by their own regulator,
at the same time,
in 1994, was completed in 1 calendar year. And that market today, I think it's called something Thai market. And it's they're doing all sorts of things, including what they now call Formosa bonds, which of course
I've heard about that.
Exactly,
it's now a global phenomenon.
Exactly. That's the opportunity that we have had because of our own petty
way of doing
politics.
Things,
but I think that eventually everybody is subscribed, or there is a better environment, and everybody has come around the project, and I must commend everybody. Even the stock exchange is a shareholder in NASD Limited. And if we really truly want to develop this economy, we must use all sources to raise capital. And we must provide, as we raise that capital, as we create avenues for people to raise capital, we must always remember that people do not invest for life, and therefore they must be able to exit. Even private equity funds that are investing in unlisted securities want an exit mechanism. Exactly. And so this OTC will provide that. Plus the fact that it's a multi-asset trading platform. So we intend to develop over time other instruments other than shares,
plain shares,
so that people can
derivatives,
so we can deepen the market and also expand the frontiers of instruments available to investors in the market.
Well, I'm not surprised. I'm happy that the people in charge of this NASD are people we know, and I know that yourselves, Mr. Chikenwanze, you have a Bola Jamale as MD. I mean, so let's have a private sector institution. It's controlled by the traders, wholly,
nearly by the traders, wholly.
But you have the exchange.
There are a few people,
institutionals.
There are a few institutionals, not many.
Excellent stuff. We'll be right back. The Nigerian financial and capital market has developed. Unfortunately, not in all ways positive. There have been positives, growth, diversification, expansion, but there have been negatives as well. A short-term market, a reduction in professional and regulatory standards. But thankfully, it does seem that things are getting better. As my guest has attested to, part of the recovery in the capital market is due to some improvement in regulatory standards. I endorse the idea of an OTC market to further deepen the market and to give support and deepening to investing in unlisted securities. Thank you very much for watching. See you next time.